stocks. We want to bring in Jared Blikre here, who's been watching all the action, of course, not just today, but for the year alongside us. Jared, I talked at the top of the show about some of the ongoing themes and big moves that we've been watching. How about you? What are you watching?
Well, I was watching you earlier. You did a fantastic job. Way to close out the year. And let me just maybe add to the discussion here a little bit. First, let's go over the morning's price action. Not going to spend a lot of time on this because not a lot happening. And not a lot is supposed to happen. We talk about the low volatility during this time of year. See the Dow Jones down a whopping 13 points here. But also, we talk about the Santa Claus rally, and that has positive seasonality. The last day of the year has actually been pretty bearish over the last 20 years. So wouldn't be surprised to see a little bit of a downdraft today, but the losses, not really seeing any big outliers for the most part. 2018 might have been around there. I think it was pretty dicey around Christmas, but things had kind of calmed down. But for the most part, don't really expect too much to happen today. Here's the S&P 500 up 2 basis points. So we're going to call that break even. Bond market also pretty quiet. So let's just skip to the Wi-Fi Interactive and a couple of observations here. I want to do a month to date versus a year to date comparison. Now, if we go to a month to date in the NASDAQ 100, we have quite a bit of green. I think it's more instructive to look at some of the losers as opposed to the winners. DocuSign down 33%. Lucid, which we're going to find out in a second, and as you pointed out before, is the best performing NASDAQ 100 stock this year, having only been added a couple months ago. It is the second worst this month. Moderna, one of the best, also off 20%. JD.com, that's a Chinese stock, another story. But Peloton down 12% as well. And as we know, that is the worst performing stock of the year. But I think it's instructive because when I was mentioning Moderna and Lucid before, because we have seen a lot of profits given back from some earlier I would say, bellwether winners of the year. So if we take a look at the sector action, we have energy and real estate, both over 40%. By the way, this is the best year ever for both energy and real estate. It's the best year ever for tech since last year. So not a lot of history being made right there. That's up 34%. But let's just see what happened this month, because we're still looking at a defensive setup. Real estate is up the most. That's up over 10% along with staples. Healthcare, those are each up 9%. Utilities up 8%. So still looking kind of defensive for the month. However, we did have a rally that started 8 days ago, and this is bullish. And all of this is just to show that you can have different time frames with different bullish and bearish outlooks. So in the short term, discretionary, tech, materials, all of those are outperforming. In the meantime, just want to take a look at the SPAC situation because I think this is really instructive as to what's happened this year. I picks out some winners and losers, but Lucid, again, one of the top players here, Playboy up 150%, but you take a look at some of the losers, and there are quite a few. QuantumScape, a big standout there, down 72%, and then Laser, that is down nearly 50%. That's Luminar. Guys?
Hey, Jared, I'm just curious. Can you pull back up that NASDAQ 100 movers and look at it on an equal weight basis? Because, we talk a lot about, there's a lot of ink spilled on how much the overall averages are pulled up by the largest cap companies. And yet, if you look at this NASDAQ 100 year to date, it's still mostly green, right? It's not just the Apples, the Microsofts, the Alphabets of the world that are supporting stocks, it seems. And I would imagine it's a similar picture if you looked at the S&P 500.
Yeah, and let me just pull up a chart of Lucid because I think this is very instructive. A lot of these NASDAQ 100 stocks are green because they peaked earlier in the year, and Lucid's a great example. I think they peaked in, what is this, February right here? Never took out those highs recently, and it's been impressive that they were able to rise to those levels, but a lot of stocks are significantly off their highs. You take a look at a month-to-date basis, it's actually still pretty green here. Let me change this to a 3-month view, so this will be the quarter. I think we do have some outliers here to the downside, but when we talk about market breadth, NASDAQ breadth in particular, this is the NASDAQ 100. I'm talking about the NASDAQ composite that has something like 3,000 stocks. It's really been poor over the last few months, and it's been trending down. It's not necessarily a huge bellwether, a warning sign for the market, simply because It's the S&P 500 really that dominates, and we have seen better breadth in the S&P 500. So there are mixed discussions around what can specifically happen into the new year regarding the liquidity situation. So once the traders return, not necessarily next week, but really January 10th is when traders are going to return, probably going to be able to capitalize on some of this momentum that we've had from the late year. And a lot of times that just translates into January, calling it the January effect. February is another matter. I see parallels to 2009, 2010. We did have, and also 2011. I think there was a big sell-off in January of 2011 too. Doesn't mean it's the end of the world. Stocks tend to go up, but we need to be prepared for that when it comes, but probably don't have to worry about that for a few weeks here.
Jared, hang tight because we asked pros such as yourself what they learned about the markets and investing more broadly. Take a listen.
I think it's been a fascinating year because there's the circus show that we always have with Musk, from the Twitter poll to what we see, across social media. You have the China issues. That was some dark days earlier this year. Would have been very easy, I think, for many to throw in the white towel. But look, this is always going to be an emotional bull bear story.
The lesson I learned is that earnings are the primary driver of stock market prices and expectations about those earnings.
The biggest thing I learned, I've learned over the last few years, is that the Fed, the last 22 months, the Fed has played a big impact on the market.
I was reminded of how quickly just how quickly downturns and then the recovery can be.
Jared, you've been covering these markets tick by tick since, well, for quite some time. What'd you learn? I think you're on mute, Jared.
Jared, I think muted.
Sorry about that. I was keying off.
Here's one lesson that's still in progress.
I could tell you learned things. I was listening to you. I was listening.
I was talking about Dan Ives' comments on China. If we can go to the Wi-Fi Interactive one more time, he was talking about some dark days earlier in the year. I'm not sure that it's any sunnier right now. This is a very beaten down sector, and I don't see any equitable relief in the meantime. I think we're going to get more bad news in 2022 regarding China. Doesn't mean that we're not going to have some spectacular short covering bounces here, but that was one of the big stories. I don't want to say it was under the radar. It's not followed as closely, but I think it has implications for years to come. Splitting capital markets between East and West, that has political ramifications as well. So I think we're at the very beginning of this process.
Sas, super quick, did you learn anything this year?
Every day. If you're not learning, you're dying. For me, money is going to continue to chase money, and the stock market can stay overvalued for a long, long time.
I've learned
Feeling
to
irrational?
live with car alarms going off during the show and dogs barking.